Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, welcome back to the show.
Jim, pleasure to be back on the show.
John, FPX Nickel announced that it's pursuing carbon capture. How does this relate to its Decar nickel project?
This carbon sequestration, which is done with when you capture carbon at the source, this is a byproduct of the work it has done with its Decar nickel project in central British Columbia. This project is very unusual in that the nickel grade Davis tube recovery is about 0.12 to 0.15% nickel. That's extremely low, but the nickel that they're measuring is a very unusual mineral called awaruite, natural stainless steel, and it is extremely rare in these ultramafic bodies that typically have nickel, cobalt, copper, platinum group metal, always enough with the metals in a sulphide form. Now, when they came up with this idea in the 2000s, nobody knew about awaruite. If anybody had noticed it, it would only have been some mineralogist somewhere who looked at it and said, oh, this is unusual, natural stainless steel. And when Peter Bradshaw pursued this further, they realized that these big deposits at Decar and a number of others, they were ophiolites. And ophiolites are not your standard intrusions, magmatic intrusions that come up through the continent. These are formed from basalts that come up in the oceanic trench in the middle of the Pacific or the Atlantic, and the basalt sort of comes up and then it floats along the surface of the ocean as the plate travels. And usually, because it's fairly dense, it's a lot of magnesium and iron, it subducts under the continent and just disappears. But once in a while, it ends up abducting, which means it actually slides up onto the continent and becomes part of the crust where it gets folded and spindled and mutilated in with the rest of the rocks. And these are different from the other ones because they undergo a considerable amount of serpentinization. And one of the minerals that is formed in this is brucite, and that's a magnesium hydroxide. Now, your typical ultramafic body has about 29% plus of magnesium, or about 48% magnesium oxide. But the mineral's in a different form than brucite. Whatever it is that causes the awaruite to be squeezed out of whatever sulfides might be present, or the nickel that's in the olivine lattice, the same process creates this brucite. And this magnesium hydroxide, it is very unusual in that if you expose it to carbon dioxide, it undergoes a chemical reaction where the magnesium combines with the carbon dioxide to form magnesium carbonate, which is a fairly hard, inert rock. So if you can get carbon dioxide to be absorbed by magnesium in this manner, you've packed it away for thousands of years. And in fact, dolomite, which is a sedimentary form of magnesium, calcium, and carbonate that forms in sea bottoms, it's also relatively inert. But this kind, brucite, it's very unusual. And the studies they did when they were doing all the metallurgical work on making a ferronickel concentrate out of the awaruite, which is separated initially by magnetic separation, then they floated to upgrade it to a 60-65% nickel concentrate that can be a direct feed for the stainless steel mills. They started doing studies with the tailings, because all the magnesium ends up in the tailings, and they worked with the University of British Columbia and other groups and established that this brucite really is very effective in doing this. And other magnesium minerals that are in these typical intrusions, ultramafic intrusions that have sulphide nickel, low grade sulphide nickel grades, they do not really have this capacity. And in the process, they started developing techniques. How can we best fool around with these tailings to maximize the absorption of carbon dioxide. And the initial goal is to try and make the Decar project carbon neutral. That's sort of the holy grail for a mining operation, because there's a lot of energy consumed in any mine, and typically it comes from, diesel or even if it's an electricity source, it might come from a coal or natural gas powered plant. And so if you can offset by having your tailings pack away a whole bunch of carbon dioxide, you can claim this carbon neutrality. But they also started seeing this as an application that went beyond dealing with the tailings from the Decar project, and they started doing research in different methods. And now they've created a subsidiary, and they've just done $1.7 million seed financing with key insiders of FPX Nickel and other related parties to fund this. And so FPX Nickel has a 76% interest. And 12 years ago, when they started this Decar project, and this is when Cliffs first optioned it and saw it as a North American source of nickel feed for the stainless steel market, FPX Nickel was worried that, okay, we noticed this. Nobody else has noticed it before. Maybe these are all over the world. So they did a survey, pulled all the data everywhere where they could. They visited these ophiolite deposits, checked them out, and they staked a number of them in British Columbia and Yukon, where they could see when they took a sample and did a polished section, they could see, oh yes, here's that natural stainless steel. They staked a bunch of those and assessed them. But at the end of the day, they realized what we have at Decar is really quite special, because you need a fairly coarse grain distribution and you need homogeneity, consistency, and they are dealing with billions of tons that are in their 120,000 ton per day mine plan that will run for 40 plus years. They've got a new discovery van which looks similar size, possibly a better grade, that could make this one of those mines that literally go forever. But what they've done with this subsidiary, which obviously they will spin it out at some point, they might end up doing another round where some venture capitalist comes along and sort of sees the green applications of this. But when the FPX Nickel reaches the point where you are going to do entertain a buyout offer by a major who's going to spend a couple billion needed to develop the Decar mine, then you would spin this out to shareholders, whatever net stake is left. At the moment, it's 76%. And what's interesting about this is really a first mover advantage. There really are no patents that they are going to be filing. They've developed 3 methods for sequestering the carbon. And sequestration, that's a word that has several levels of meaning. One of them is that you take carbon and stash it somewhere where it's hard to get out of, but there is still a risk that some earthquake could open a crack in some salt dome or some other cavern where you've stuffed it, and the carbon dioxide, which will have been pumped down into the earth, manages to escape back into the atmosphere, and it was all a waste of time. This is different because you're mineralizing the carbon dioxide into an inert mineral form that will sit there for forever. And that's what their form of carbon sequestration is. And their goal is, when they set up one or any one of these 3 methods that they've developed, somebody who has captured carbon and maybe compressed it will end up delivering it to them and pay them to take it off their hands and pack it into this inert form, or some nearby power plant will run a pipeline and pipe the flue gases, and then they'll handle those and mix them in with the rocks to take care of it. Now, the 3 methods, the first one is the simple one. They call it ex situ CO2 injection into processed BRSP, and that's short for brucite-rich serpentinized peridotite. And what that's a fancy phrase for is originally the tailings. And FPX Nickel is going to generate these tailings. These tailings are only going to be generated if you have enough metal in your deposit to make a mine. And only these types of awaruite deposits are going to have this brucite mineral, which forms under the similar conditions as awaruite, available in the tailings. Any other types of magnesium tailings is not going to be very useful for that. But what the subsidiary will end up doing is FPX will find any of these deposits that have 0.1% DTR nickel and own those and develop those. But anything else that's lower grade, or like some of those ones that they've discarded in British Columbia and Yukon, where the distribution is erratic or the grain size too small, those will end up being acquired by what they call the company CO2 Lock Corporation. They will acquire basically worthless deposits, giant ultramafic deposits. And with this first style of processing, they will literally mine, quarry the rock, crush it up, and then to the right sort of size, and then expose it to the carbon dioxide that's provided from some source. And the carbon dioxide will end up mixing with the magnesium hydroxide, which is what brucite is, and forming magnesium carbonate. And then they can take this as aggregate and sell it to whomever wants to use it for some sort of building material. The second method is really sort of intriguing, because what it is, they call it ex situ water from BRSP. And it turns out that these basalt body, the basalt as it travels along the ocean, ocean floor becomes saturated with water. And that stays inside the rock as it slides up onto the landmass and ends up being, covered by other rocks. And when it gets folded and serpentinized and the awaruite and the brucite forms, this water stays in there. And they've figured out that when you drill drill holes into this and maybe even fracture it, the water seeps out, comes up the hole, and this water is carbon dioxide starved. It's very alkaline. It will have dissolved the magnesium. So literally they take this water that comes out to the surface and expose it to the carbon dioxide in some manner that they haven't yet described. And this causes the magnesium, again, to precipitate out as a magnesium carbonate. And it's a rock that's very similar to what you find in hot springs. And you can measure how much carbon dioxide was actually sequestered by just weighing the volume of this material that's created. And it'll be relative. And this can be used for other purposes. And you would think, wow, you're going to build a mountain of this stuff. Well, apparently an extraordinary amount of carbon dioxide can be converted into magnesium carbonate in this way. And then the third way is the old-fashioned in situ emission, and this is where they would drill holes into the bedrock again. And in this case, instead of waiting for the water to come up, the alkaline water with the magnesium dissolved into it, this time they will pump the carbon dioxide down into the whole system, and of course they'll have fracked it also so that there's cracks in it, and the carbon dioxide will end up reacting with the brucite that's in the walls of the holes and also in all the cracks and fissures. And they can just do this over and over, Swiss cheese this rock, and get rid of the carbon dioxide, gradually packing it underground, out of sight, out of mind. And this potentially can be applied all over the world. And as I mentioned, there's no patent protection for this technology. This is public domain technology, so they cannot license it for those types of purposes. But there is know-how involved in how do you do this. And one of the most important things is how do you assess an ophiolite deposit for its brucite potential to pack away carbon. And for assessing its metal potential, that's relatively easy. You just drill holes and an assay for the different metals and then do metallurgical work on the best recovery flow sheet. And if you meets all the economic standards, you develop it as a mine. But brucite is not so easy to identify because it is a mineral. And then you also have to measure the natural fracturing within the body to see how quickly everything will recharge when you drill these holes. So they have been working on this for at least 6 years, developing all this know-how, and because they also built this database 10 years while checking out to see how many similar such deposits there were, and really just found a whole bunch of dud deposits, similar deposits, but duds in terms of awaruite, they now have the ability to go there and stake all of them relatively cheaply, conduct these assessments at their own pace and with their own dime. And the ones which are very well suited for packing away carbon, those they will keep. And obviously they're going to keep the ones that are close to some power plant or other place that is going to capture a lot of carbon that can be delivered to the site and packed away. And this is an emerging business. All this talk about the clean energy transition, moving to renewables or nuclear and maybe ultimately fusion. Well, none of that's going to happen overnight. We're going to be stuck with fossil fuel combustion for some time yet, but something has to be done for dealing with the carbon dioxide loading. And in cases such as natural gas, do we really want to heat homes with electricity generated from renewables? Natural gas may be with us for a long time, and why not use something like that is relatively available and cheap? But let's deal with the carbon dioxide. So this is an emerging business area, and FPX Nickel has figured out how to do this, developed a subsidiary that can eventually be spun out. And, I personally think the FPX Nickel for its Decar project will disappear in the sort of $3 to $5 per share range at some point after they've completed their pre-feasibility study. But with something like this is potentially open-ended, what it could end up being worth. And it's interesting. The market did react positively to it, but I think it doesn't really understand how significant this is. They don't see the IP protection, and they don't understand that it really lies in the first mover advantage, and that they'll pretty much will have a lock on all the really good deposits, these brucite-rich serpentinized peridotites that are suitable for applying this carbon sequestration technology.
John, one of your bottom fish called Inomin Mines traded up a storm this week and delivered a 5-bagger. Is it time to turn Inomin into a favorite?
I would love to do that. I flagged Inomin Mines as a bottom fish a couple of years ago, repeated it in November, December of this year. It was around 15 cents. But I did this primarily for the La Gitana project in Mexico. This is a gold system I've optioned from Randy Rifle's Gunpoint Exploration, but they were also pursuing a couple of nickel projects in British Columbia, the Beaver and the Lynx, and these are low grade, less than 0.2% nickel type systems, and they're trying to piggyback onto the FPX Nickel story. With its low grade, 0.1 to 0.15% nickel. But the Decar project, that is based on the awaruite mineral, which is 75% of all the nickel that you can assay in that rock. Now, Inomin's Beaver project, they announced results of a 5-hole drill program. It wasn't very much, about 716 meters, and they reported nickel grades of, ranging up to about 0.19% nickel. And they used a method that doesn't really measure the nickel that's trapped in the olivine lattice, which often is 0.1%. So some of these 0.2% nickel deposits, only have 55% recovery because the nickel that's stuck in the olivine lattice, nothing is going to get that out and make it available in the concentrate that ends up being put into a smelter. But they used a method, and so this is probably somewhere in the 0.1 to 0.2% nickel. This looks like they have a fairly large body of this, And they also reported cobalt grades, but these are so low, they're not even worth mentioning. And they also trumpeted that they had about 0.3% chromium in it, and that's 1/100th of what deposits such as Black Thor in the Ring of Fire that Free West found 12 years ago, which Cliffs ended up buying out to try and develop a chromite mining operation in northern Ontario. But the way they packaged up this press release was, we have made a critical minerals discovery, and they featured magnesium as first. And the magnesium ran from sort of 11% to 23% magnesium. And that's about 60% of magnesium oxide. And so 29% is typical for an ultramafic body. So what they've really reported is background type of grades for a metal that's not really recoverable from this type of ultramafic rock. So this is an extremely misleading way of presenting a discovery. It's only the nickel that is potentially interesting, and that's all in different sulphides, pentlandite, hazelwoodite, and others. They have no awaruite in this whatsoever. So you're going to have to do flotation. You're going to have to send the concentrate to a smelter, and then nobody's going to buy that particular smelted product for their battery grade nickel sulfide. No, that you're just going to buy that from the LME warehouse, where it's all going to end up as a generic ingots of nickel with whatever the LME refined grade is. So they try to jump onto the clean energy bandwagon, but there is no way of doing it. But they also were so egregious as to trumpet that they sent some samples to Dr. Greg Dipple at the University of British Columbia, who specializes in the carbon sequestration capacity of different rock types. And he does this for anybody. You send him rocks and pay him the fee, and he'll look at it and analyze what the mineralogy is. And apparently 98% of these ultramafic rocks that get sent from these various juniors, they have very little capacity to pack away carbon. And unless your deposit really is an ophiolite, such as what FPX Nickel specializes in, which has the brucite form of the magnesium mineral, your deposit with its nickel and copper, platinum, it's not going to be useful for carbon sequestration. But the market liked it. The magnesium is one of these metals that China absolutely dominates production. They are 85 to 90%. Next in line comes Russia, and we know there's nothing coming from Russia at the moment. And then comes Kazakhstan, and then Brazil, and then Israel, and then Ukraine. Now, where does China get it from? It actually recovers it from brine. And the reason it dominates is because they have fairly cheap ways of doing this, which is code for saying that the downstream environmental impact doesn't really count. But the magnesium is ubiquitous in brines around the world. There's no shortage of it. And recovering it from hard rock, bedrock, it's not really worth the bother. But it is an important alloy for metals such as aluminum. And if China suddenly stops supplying magnesium to the rest of the world because it's now in a major tiff over its alliance with Russia with regard to the Ukraine war, and the United States ends up in some sort of trade war squaring off against China, well, then there's going to be lots of magnesium noise, and the price of magnesium has indeed risen. It used to be, magnesium metal used to be $1.30 a pound, or now it's $3-4 a pound. But again, that's more a problem with sort of supply bottlenecks, fabrication problems related to the pandemic from the past couple of years that have disrupted the supply line just as the demand kicks in as everybody moves on beyond the pandemic. So Inomin, it's traded over 30 million shares since putting out the news on Tuesday. It's up 5 times from its 11% price. But to me, it looks like a pump and dump hijack. maybe not orchestrated by management as such, but certainly hijacked by the market. And I do not think this will end well unless they suck in parties to put money into the treasury that allows the company to go back to Mexico and get the gold project, the La Gitana project, up and running, because that's a nice story where they can get all the access rights on that taken care of. That's one where value can be created, and there's not a lot of paper out on Inomin Mines. So hopefully they end up doing something like that and stop talking about this story, which has been packaged up in a way to badly mislead the market, because they just don't have what it takes to be involved in carbon sequestration, and 0.16 to 0.18% nickel sulphide deposits really don't make it, and the cobalt and chromium that's in there is not going to be payable when you ship it to a nickel smelter.
Nevada Exploration provided an update on its South Grass Valley project this week. Just how much closer are they to delivering a discovery hole?
You know, Jim, there's some of these things, it seems like the closer you get, the farther the destination gets away. They started drilling this hole in December. The initial hole had made it almost to bedrock, but they had, after measuring the angle of the hole, surveying it, they realized this thing is steepening. It's not going to go across the Water Canyon structural corridor. This is this north-south zone of structural complexity where two different stratigraphic packages come together. Looked like it was a chevron at the 3.4 kilometers to the north with hole 12. So it's kind of a crunch zone where everything comes together. So they started a brand new hole and didn't really get to bedrock until sometime in January. It was like 500 meters. Then they went through about 110 meters of post-mineral volcanic mud flow, and then they finally got into the lower plate Goodwin formation. But just where they did this, it was very messed up. They were already in the crunch zone, and they labored and labored and labored away, and at 754 or so meters, they finally packed it in because the drill just wasn't making any progress in the busted up rock. However, they did manage to get about about 134 or so meters of this Goodwin Formation rock, which by itself is marbleized and not likely to have anything, but it has been punctuated by breccia's explosive matter coming up, and that appears to have fragments of what they now call the Hale Formation. This is the Cambrian limey mudstone, which is their target horizon, the kind that's likely to soak up Carlin-style gold mineralization. And their XRF unit says, yes, all the Carlin pathfinders, arsenic, antimony, thallium, they're all, anomalously present. So there's some outside chance that when they assay this, there might be a little bit better than 50 ppb gold, which seems to be the curse that NGE's Wade Hodges is burdened with, that he can never come up with an interval higher than 50 ppbs. Now, they realized that the drill was not adequate for the task, and they are going to use an RC rig to sort of record the part leading up to it, and then they're going to get a higher capacity rig to push that hole through. And they seem to be right in the middle of the Water Canyon corridor, stuck at a thrust fault they call the Hydra. This is a real nasty type of rock to try and get through. So they've gotten a second rig, moved over 1,100 meters, and this is close to the eastern flank of the Grass Valley stock. They're going to drill a vertical hole. The gravel is going to be shallower. Hopefully they hit the Hale Formation in this area. On the east side of the Grass Valley stock, they have only drilled with a shallow, not very powerful RC rig, so all they got was the higher up stratigraphy that shows all the alteration and everything, but doesn't have the capacity to soak up any gold. So we're back to sort of square one, starting a new hole. Hopefully this one goes a little faster. Hopefully it doesn't plow right into the the Jurassic granite stock because there's not going to be anything in it. They want to be just off it in the whole sort of fractured lower plate rocks where the doming effect of the intrusion would have really broken it up and created lots of fractures and crevices for the fluids to come through and drop their payload in the right chemical receptors. So no, we're not really any closer to having a discovery hole. However, they did a couple of weeks ago announce an interesting deal which had a bunch of my subscribers initially worried because they took a 1 million acre area, sort of roughly 65 by 65 kilometers, and created an area of interest with an Australian company called Astro Resources. And this is a very strange company. It went public about 1997, around $3 or so, shot to $8, and then collapsed within several years below a penny. And this has to be the absolute worst bottom fish I have ever seen, in the sense that it has never traded above a penny for over 22 years. It's up to 4.2 billion shares fully diluted, but it's run by an entrepreneur called Leo the Gun Khoury, who's been also quite successful in biotech ventures. His son Jacob is the chairman of it. And a couple of years ago, they hired Greg Jones, who used to work for Western Mining, where he knew Paul Toffin. And Paul Toffin was the geochemical brains behind Nevada Exploration's gold and groundwater story. He was the one who developed all the protocols for how to reliably measure gold and groundwater, which in the decades prior was not possible because the laboratory's detection limits were too high to detect the very trace levels that gold does dissolve into groundwater. But he had this misfortune in his mid-50s in Australia, had a stroke or a heart attack, and it was that they didn't handle it properly, and he passed away, but not before he had interacted with Greg Jones, who became convinced that, this groundwater stuff really works. And so he's the inspiration behind this Australian blob company trading below a penny, taking on this large area, and they haven't really put out a map showing where it is, but we know it's on what they call the Awakening Project, which is just north of the mined out Sleeper deposit. It's in the sort of the epithermal part of Nevada. It's not within that huge area, what John Montine calls the sort of Farallon subduction slab rollback area. That's where all the Carlin type deposits is. This is more to the west, beyond where the subduction slab rollback ended, the so-called Walker Lane. This is where you have epithermal gold silver systems. And so this company, its deal allows it, for 1.4 million US exploration over 2 years, which is pretty much committed. They have to do this. This allows them to pick and choose projects, and there's several that have already been designated because of groundwater work done by Nevada Exploration Inc. If they pick any of these areas, the farm-in earns them 70%, and if they pick anything else, it's 90%. And the market was somewhat unhappy with this. He says, you did all this groundwater collection, you identified several hotspot areas, and you hand this off. But the trick here is that they don't vest until they deliver a JORC estimate, resource estimate of a minimum 750,000 ounces gold. And if you know anything about Nevada exploration, it costs a lot of money to come up with any meaningful resource in that part of the world, especially if you're dealing with undercover targets such as what this is. This is all under gravel. So it is actually a quite strong deal that carries NGE on their primary areas for a 30% interest to a point where the other side doesn't vest until there's something very significant developed, and a 10% in all the other areas. And there's a chance that Astro, whose management is very keen on gold and groundwater sampling in Nevada, may step up and even hire Nevada Exploration Inc. to do groundwater sampling in this area. And it does not give them access to the other area where they have their 6,000 personally collected samples and much of the other 50,000 samples that they collected. Most of that's within the Carlin type area. They're still keeping that for themselves. At the moment, nobody cares because South Grass Valley, wonderful success story in the sense of we found a blind lower plate, highly altered system with all the Carlin pathfinders. But until they find an ore grade gold intersection at South Grass Valley, the market really isn't going to care. But maybe the arrival of this Australian group with their 4.2 billion shares fully diluted, trading below a penny, with deep-pocketed shareholders who apparently own a considerable chunk of these 4 billion shares. Maybe this will indirectly change the fortunes as a fresh set of eyes from another continent, a continent that's quite experienced with looking undercover for blind targets, comes to America and looks where the natives are unwilling to look, which is deep undercover.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.